Welcome to Markets Now. I'm Michelle Rook along with Vince Boddicker with Farmers Trading Company, and we're seeing mostly higher prices in grain and livestock futures with the exception of some of the wheat complex this morning. So, Vince, I want to start off talking about soybeans. We kind of faded some of the bullish news in the report yesterday, the WASDE report, hitting some chart resistance once again, but we're back up this morning here. It looks like the CONAB numbers might be giving us a little bit of a push here in some private exports, a little flash sale this morning of about 7 million bushels of export business.
Definitely, and it's the bean numbers I think yesterday were okay, and stocks are fairly tight. Stocks to use, and the stocks in the U.S. fairly tight. And when we got some of those numbers out of Argentina below 30 million this morning, I thought that was interesting. And USDA dropping those Argentine numbers by about 3 to 4 million more than they thought yesterday. I think we're supportive in the beans. It's just wonder as you went along. Um, the wheat market not doing things and just looking at that additional carryover in the U.S., I think a little burdensome on where we're at.
Right. So the exports this morning, we also had some cancellations on the old crop category and soybeans. So obviously we're starting to see that market or that export market wane a little bit, which we expect for this time of year. But I'm impressed that we're holding up pretty well here with some cancellations for this morning.
I would agree, and I think they look at that and what is pipeline, I think on beans 180 million, you're at 210, so you're not that far away this early in the year. And hopefully those cancellations are done with where we're at. We can pick up a little bit, but yes, all in all, holding fairly well.
Yeah. So do you think we have all of the South American crop production losses kind of worked into the soybeans already? Is that the reason we can't seem to get above these overhead resistance areas on the charts, or what?
That would be my guess for right now. The question is, as we get closer and get another month down the road, do we react at that point and say, okay, maybe this is worse than we thought, and other people jumping in? But I think just the thought of not seeing those daily sales is part of our hesitancy.
Okay. So corn market, as you say, kind of disappointing. We're only up like a half to a penny here initially on exports at 55.6 million bushels on a weekly basis. What is the problem with the corn market? And we did have a horrible close yesterday, didn't we?
We did, and I think you looked at some of those world numbers, picked up a little bit there, not a lot. That might have been part of the disappointment. I think it was 2 or 3 million more. Agree, shouldn't say more, but increase from last month. And I think it is look at the lack of daily sales, look at where we're at on those export inspections, look at where we're at from a standpoint of export sales themselves, and the market says, can we really catch up? Ethanol, no runaways on there either. That isn't helping us, I don't think.
Right. And we did close soybeans below support areas, not soybeans, corn below some key support areas yesterday. And so do you think we have a lot more downside risk? And is today's bounce just kind of a dead cat bounce?
I think the next couple of days will help answer that question, Michelle. In my view, I'm looking for a couple of short-term lows in corn this week. If we can hold those lows of last week, I think the market could be okay for a bounce. We may just be in a point. We were in a sideways trade for a while, for a couple of months. Maybe we're going to do something, same thing at a little lower level. I would guess to get front month corn over 660, you're going to need some weather problems or bigger increases in daily sales and weekly sales to make that happen. But I think that's a possibility down the road. But I think if we look at the bigger picture and look at that stocks to use ratio in both corn and beans, right now the market is not friendly. It's bearish because of what could be happening by numbers coming out of those baseline reports. But longer term, with those very tight stocks to use ratio, if we got any problems in this country at all this spring or this summer, it could get interesting in a hurry.
Yeah. The other problem with the corn market, obviously, has been the new contract lows that we scored even yesterday in the wheat market.
Yep.
It's been kind of holding corn as a prisoner. Do you think wheat is done going down? Have we worked in maybe the idea that this export corridor, the Black Sea deal, is going to be extended? Is that what the problem's been?
I think that's part of it. And again, you haven't seen a lot of decent daily. At least we're not daily seeing an increase in that Russian crop anymore like we did a couple of months ago. But I think that's looming in people's mind. We haven't talked much lately about how hot it's been in Europe lately. Is that going to affect the winter wheat? Is it's dry and those things? Well, where will that crop be? But we are ideally on my stuff due for a 45-week low in the wheat market, ideally that last week of February. So we could definitely be coming into something, whether it's here or in the next few weeks. I would think we get a decent little bottom established and get at least a dead cat decent bounce in here, which should help the corn.
Well, it is about time. That wheat market has been a train wreck, that's for sure. Cattle market, let's move over there. We opened a little bit stronger, but as you and I talked, that market is starting to fade a little bit. And, the market, even though we have all these strong fundamentals, has been kind of consolidating under these recent contract highs. Is that something that you're concerned about?
Well, I think on the cash side of the live cattle, I think you're struggling with box beef that took its spring rally 4 to 6 weeks sooner than it usually did. Could we be topping out in here by looking at some of the volumes and how that's traded? I think we can, and I think a lot of it's really going to come down to where is export demand at, which was light today, and where is domestic demand at. I think we can hold this together well, but I don't think we can be surprised to think we're going to get a correction in here anytime. A $3 to $4 to $5 wouldn't be unusual. The question is, do we do much more than that? I think feeder cattle have been on fire as the cash sales last week finally picked up, and early this week with some sharply higher numbers. I'm sure lower corn is part of that.
Right. So Vince, the hog market this morning trying to bounce, but those bounces have seemingly been fairly short-lived, and it seems like we have a lot of numbers coming at that market. Or is there another problem that you see that's kind of limiting the upside in that market?
I think the trade has seen some bigger numbers the last couple of weeks than they thought they would see. The question is that because of some hogs that did get backlogged from time to time with weather, is USDA reports off from previously. I think they're going to find some anticipation until we come into our next pig report here at the end of the month, and then maybe you do it. But it feels like we're trying to bottom this. A normal seasonal bottom would be third week of March to the first week of April in that pork complex, and hopefully we did the one we should have had in December late. Maybe they're both going to come together.
All right. Well, we've said that before. We've thought there's been a bottom in that hog market. So hopefully you're right this time. All right. Thanks so much for joining us, Vince Boddicker with Farmers Trading Company, and that's Markets Now.
Have a great day.